On behalf of Centrum Broking Limited, I would like to welcome you all to Relaxo Footwears Q4FY22 earnings conference call. From the management, we have with us today Mr. Ramesh Dua, Managing Director, Mr. Ritesh Dua, Executive Vice President Finance, Mr. Gaurav Dua, Executive Vice President Marketing, Mr. Sushil Batra, CFO, and Mr. Vikas, Company Secretary. We'll begin the call with a brief discussion from the management, and then we can open the floor for Q&A session. Over to you, sir. Thank you.
Thank you, Akhil. Good afternoon to everyone. Ladies and gentlemen, thank you very much for attending our earnings call for the financial year 2021-22. We have already shared our earnings press release and result presentation. Hope you got an opportunity to go through that. I will start with Q4FY22 financial performance, followed by full year FY22 financial performance. In Q4FY22, Relaxo booked operating revenue of 690 crore as compared to rupees 748 crore in the corresponding period of previous year. Revenue during the quarter was affected due to disruption caused by Omicron variant of COVID, GST rate hike from 5% to 12% with effective from January 22 on footwear price below rupees 1,000 and subdued demand due to high inflation. EBITDA during the quarter is at rupees 111 crore as compared to rupees 163 crore in the corresponding period of the previous year. Our EBITDA margin for the quarter is 15.9%. EBITDA margin decreased mainly due to steep increase in raw material prices and extra support provided to trade towards GST rate differentiate on inventory. Our profit after tax is rupees 63 crore for the quarter as compared to rupees 102 crore in the corresponding period of previous year. For FY 2022, our revenue stood at 2,653 crore as compared to rupees 2,359 crore, which is a growth of 12% year on year. The growth in revenue is achieved mainly due to calibrated price hike taken during the year to mitigate impact of high raw material prices. EBITDA is at rupees 416 crore as compared to rupees 495 crore in the previous year. Our EBITDA margin for the year is 15.7%. The decline in EBITDA margin is mainly on account of increase in raw material prices and normalization of selling, marketing and administrative expenses in FY22 as compared to FY21. Our profit after tax is rupees 233 crore as compared to rupees 292 crore during the previous year. During FY 2022, we generated a cash of rupees 140 crore from operations and spent rupees 140 crore in capex. At the end of March 31st, 2022, we have 394 exclusive brand outlets which contributed around 7% of our FY22 revenue. Export crossed rupees 100 crore mark and is picking up with opening of market and its contribution is more than 4% of revenue of FY2022. Going forward, we are cautious about the continual extraordinary inflation and remain cautiously optimistic on the basis of strong recovery across categories, especially in the high-value closed footwear category after opening up of offices, schools and colleges. We believe that we are well positioned in the footwear marketplace by providing the right price-value equation to our customers while making sure our product remain affordable and accessible. We remain committed to all our stakeholders by creating a strong foundation for the future which can provide us sustainable and profitable growth for the long term. Thank you. We can open now the floor for questions. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the questions queue assembles. Our first question comes from the line of Tejas Shah with Spark Capital. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. We'll start with a couple of basic questions. If you can help us to understand the split between the realization split increase which has happened between price increase and premiumization, if any, happened during the year and during the quarter. Hello?
Yeah. Price increase, because this full year was lot of inflation, raw material prices went up, so price increase was in the range of 25% across all the categories, in few categories more and few categories less. So this is majorly due to the price increase. And product mix, because closed footwear was sold much more as compared to FY21, so that mix also happened in this year. So overall increase majorly is due to price increase.
So, sir, this 25% price increase would be at customer level because of GST increase as well, but that would not have totally reflected in our numbers, right?
No, it's a mix of raw material and GST. GST came only in January 22. That was the last increase we took. But overall, from start of the year, from May onwards, raw material prices were going up, so we took four price increase in full year.
Okay. So second, how though initial period yet, but almost 4-5 months have passed by after GST increase has happened. So what is the initial feedback in terms of customer and both channel, whether they have absorbed this price hike easily, or it will take some more time for demand and channels to settle down on this?
Yeah, Tejas, Gaurav Dua this side. So it's been 4 months, you are right, and what we are seeing is in first 2-3 months there was a pressure because it was new for the trade. There was a lot of resistance. People were talking about taking this price back from 12 to 5. They were giving a lot of representation to the government, but now it is settled. The rates have been settled. Post that, but there is definitely pressure because of inflation. Consumer sentiments are still not so great, and whatever the pass on of price what we have done or the industry has done, it's taking time for the consumer as well as for the trade to take it.
Okay. And so last one, we have based on the recent channel checks which has been done on the sector, it is seen that there's a huge traction in online channel for closed footwear, especially the sports footwear or athleisure footwear. So have we seen any such traction in our number A? And what was our exposure to online channel for the full year as a company and also within the Sparks brand in particular?
So yes, Sparks brand has done very well in e-commerce platform, and we can see the growth rate was more than 40% in e-commerce platform. So there is a traction of sports shoes selling more on e-com.
Okay. And so what will be the total exposure of online as a channel for us?
We were last year around 10%. Now it is 11.5.
Okay.
So it's going to go more. Yeah.
Yes, sir. Go ahead, please.
Yeah. No, you can continue.
No, sir. I'll come back in queue for follow-up questions on this. Thanks and all.
Yeah. Thank you.
Thank you. Our next question comes from the line of Gaurav Jogani with Axis Capital. Please go ahead.
Thank you for taking my question, sir. So my first question is with regards to the RM inflation, as you have highlighted. So is the bulk of the RM inflation now done, or do we need to take further price increases to mitigate this RM inflation that we are seeing?
I am Ramesh Kumar Dua this side. Raw material situation continues to remain unpredictable. You cannot say for guarantee everything is settled. Always we are getting news. Different kinds, sometimes packing material, chemicals, polymers. So things are not stable as yet. We can't say confidently that things are stabilized as far as the raw material situation is concerned. But we have to be watchful of it, and accordingly we have to see market dynamics also, and accordingly keep on taking appropriate action.
Sure, sir. So to put the other way around, if assuming, whatever the RM prices are today, so does it covers the, whatever the price increases that we have taken, as on today, RM price, do we cover it, or do we need to still take further some pricing action to cover the impact? Because, the impact on margin is huge, as can be seen from the results. So still, do we need to take more price increases to even cover today's RM inflation?
No, we have to wait and see all these things. Ultimately, our goal at the moment is to focus on our market share in the market and keeping in view the article that we are in, which are meant for masses, lower rank of society. So that's very important. We keep a strict vigil on it and accordingly take appropriate actions at appropriate time.
Oh, okay. Sure, sir. Sure. And so my next question is with regards to, your volume, if you see this particular year. So the volume this particular year has even, seen a decline if we compare versus FY20. While I do agree, that there was some impact during, the first quarter of due to Omicron, and even this quarter was impacted. But how do you see the volume trajectory going ahead in the light of the sharp RM inflation that we are seeing, given, the target consumer is very price sensitive?
So last year, if you remember, in May we had this corona wave where everything was shut down, and followed by January also we had a small Omicron variant coming in. So that definitely there has been pressure on volume in terms, because last year the open footwear was selling a lot because people were at home, and the shift, there was extraordinary sales happening on last year. So to sustain that was a challenge. And going forward, the consumer sentiments are still not so buoyant. So we feel, I think after maybe quarter one, the things will come back. But very difficult to say right now because of supply chain things are not settled, raw material prices are not settled. But we are hoping that quarter two onwards, we can see some recovery.
Sure, sir. And the one last question from my end is regarding, the sportswear segment. I mean, sir, the sportswear, or so to say the casual footwear segment, has been seeing very good traction as such. And in this light, we have seen lately one of our competitors getting listed on the exchange, and they have been showing smart growth in Q4 as well. So, in that extent, sir, if you see, what is our action towards the sportswear segment? What are we doing to address that?
So we have three brands. They are basically, for them it is the athleisure brand what we hear. So that is 1/3 of our business. So we are also seeing a good growth rate in athleisure and sports category. So we are growing in line with the industry.
Sure. So because anything that you're seeing, because a general market check suggests that they are higher on the market share percentage-wise, given that they are very dominant in that segment. So anything that we are doing in terms of product launches, or expanding our reach on the online, or anything of that sort that you can highlight, that we are increasing our presence there?
But definitely, we are taking some steps, and I think it's like, for example, we are increasing some A&SP spend on e-com and having new tie-ups with different channels also. So it's a continuous process.
Sure. Thank you, and that's all from me. I'll come back for more questions.
Thank you. Our next question comes from the line of Bharat Chadha with ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity, sir. Generally, when we see Relaxo has a good working capital cycle of around 50 days, but this time it appears to be on the higher side of it, closer to 90 days. So what is the reason for the same, sir? Is it more of RM raw material being accumulated, or is it the finished goods? Can you just provide a brief view on that?
This year being because there was a pressure on the sales, people also. So our inventory has increased normally more than the expected, and there are two reasons for inventory increase. One is the pressure upon sale, and then the prices also. Because your cost of goods and everything has increased. So it has also given a multiplying effect upon the inventory. That is the one reason.
Sir,
and
your voice was not clear. Could you please repeat, sir? I was not able to get it.
Okay. Just I'm repeating. So inventory is the major reason for working capital disturbance in this year. And there are two reasons. One, there was a pressure upon the sale. And second, because the cost of goods has also increased, even raw material also, and we were carrying little more inventory just to be more cautious about the future price increase. So inventory has increased in the balance sheet, that is visible also. And second, I think some debtors also little bit, not much, but little bit there is an increase. So these are the two reasons the working capital is under pressure. And material raw material also.
Okay. And sir, we have seen this, the realization being significantly higher at this level. Do you see we would see an impact on the volumes going ahead, and probably also what is the margin we should work with? Like, is it a 17-18% kind of a margin that is possible for us to maintain with the current level of this?
Yes, margin definitely, because this year being a little tough year comparatively, and FY21 was a best year, even we never thought, but FY20, if we compare with that, so that margins are definitely achievable, and we intend to, and we are hopeful that will be achieved. FY20 base, if you see.
So FY20 base is what we should work with for FY23?
Yes, we can say. FY20 was 17, and this year we achieved lower than that, so definitely we intend, and it's possible also.
At this level, do you see the consumer actually, like the volumes, are they being impacted, or how is it? Because that, could you please provide a view on that? How the consumer is reacting, the volumes have been down, or how it is at this price levels? I think initially there has been a comment from your side probably, but post that stabilization, is that volume again picking up?
So as you are well aware that because of inflation, the purchasing power of the lower end of the pyramid, the mass market, they are feeling the pinch of inflation. So they are looking, some of them are looking for cheaper alternatives, you can understand they are, because they have no money in their pocket, so they're going for cheaper alternatives. So there is a volume pressure, no doubt about it. But I think from Q2 onwards, this thing will be much better.
Okay, sir. That's it from my side. Thanks for answering the question. Thank you.
Thank you. Our next question comes from the line of Maithili Balkrishnan with Alchemy Capital. Please go ahead.
Thank you. I just wanted to get a couple of data points from you. I wanted to understand the mix between the different brands, Spark, Bahamas, Flight, and the normal Hawaii.
So we are doing like Hawaii and Bahamas come under Hawaii division, so that is around 25%. And Flight is 37.5, and similarly is Sparks, 37.5.
Got it. And within Sparks, right, 60% was sandals and the rest 40% was the closed stores. Has that portfolio sort of changed in terms of the mix?
Yes, it has changed. Now it is 60% shoes and 40% sandals, as athleisure growing tremendously.
And are the sandals a part of the business under pressure, or both of them are doing?
Both are doing well. The only thing is there is a good demand in athleisure and sportswear. That e-commerce is going much faster because of India becoming more fit and demand of these products are going high.
Got it. Could you also help me understand the distributor and channel mix for us currently? I mean, how much EBO, online, and wholesalers?
So we have around 680 distributors, 650 to 680 distributors, and online contributes around 11.5% of our sales. 7% is contributed by retail and 4% by exports.
Got it. And my last question was on CAPEX. We have spent like around 140 crores this year. Just wanted to get a sense of, is that like some larger CAPEX in the footing given our venture into the south, etc.?
No, we don't have any intent to spending in South, but definitely we are expanding our capacity in North, where we have our own setup. So we are integrating our back-end operations, and for that we are working. So this year also we have intent to spend around 100 crore. It will add to the back-end operations mainly.
Thank you. That's all from me.
Thank you. Our next question comes from the line of Manish Podar with Motilal Oswal Asset Management. Please go ahead.
Hi, sir. Just 3 questions. First is, if you can help me with this extra trade support which you have given to the channel, how much is the quantum for that?
So extra trade support we gave in Q3 because we were having inventory in December and GST was effective from January. So in that quarter we gave around 15 to 18 CR, and in because we were carrying some inventory at our end also, we gave the support in this quarter also. That is around 8 to 10 crore in this quarter also.
Okay, and you said the prices in the channel now, or let's say the inventory in the channel is liquidated or has got the new pricing. Is that a fair understanding?
It's now new pricing material has come in the market, so that old inventory is almost clear. So now everything is through in the system.
Okay. Just 2 more data points if you can. You said now 650 odd distributors are there. How many distributors have you added in the full year?
So that is roughly around 10% what we have added.
Okay. And just in terms of SKUs, would you be able to help me how many articles do we have, and let's say what is the addition on a YOY basis?
So just 400 articles we have right now, and if you talk about SKU, it is just a second. 12,257 SKUs we have.
And what is the change? Is it a reduction in that? Because in my view it's a reduction. Just wanted to understand what was this number, let's say FY21?
No, there is no reduction in SKUs. So
it's around 10 to 12,000. Generally, it always keeps changing also. Na? Some articles are plus and some minus also. It's always changing, but range is around 10 to 12,000.
Okay, fair enough. Thank you so much.
Thank you. Our next question comes from the line of Ashish Kanodia with Ambit Capital. Please go ahead.
Yeah, hi sir. The first question is in terms of capacity addition. So in terms of volumes, what is the capacity addition plan for the next 2 years, and across which brands or categories will we be expanding those?
Already we have reached a capacity of 10 lakh pairs per day. And utilization is around 65%. And within this category, we are focusing to see some capacity of whatever is required in shoe division.
Okay, sir. Got it. Second thing, in terms of price hike, I think the full year price hike was 25%. But in terms of, the price hike taken in 4Q, apart from the 7% which you might have taken because of GST, was there any, other price hikes as well?
The last price hike we took in December, but that was inclusive of GST as well as material impact also. So that was the last one.
Okay, very helpful. And last question in terms of, there is an inflationary trend in RM prices, but is there any disruption in the supply of RM as well, or at least on the supply side, that's not a challenge?
No, we are getting the supply, but we are, what we are doing is we are maintaining inventory of the material, because this uncertainty is there, it is always there, so we have to keep some material, raw material in inventory for possible any disruption if is there.
Sure, sir. That's helpful. Just on the inventory side, is it possible to share out of the total inventory which we are carrying at the year end, what percentage would be pertaining to finished goods and what percentage would be on of raw material?
Percentage for overall maximum inventory is related to FG, because most of the material we keep around 50 to 60 days inventory in the system, but this time it was a little higher. So averagely we keep around 40 days, but this time it is higher. So percentage term, so you can say around one third will be around 30% will be raw material and rest is WIP and FC.
Okay, got it, sir. That's all from my side. Thank you.
Thank you. Our next question comes from the line of Nikunj Gala with Sundaram AMC. Please go ahead.
Good evening, sir. I just want to understand on the pricing trend. You mentioned 25% increase which you have taken. So this increase is at a consumer level, or if I look at your realization increase on a YOY basis for FY22, it is also near 22.7%. The similar kind of increase is also at a consumer level?
On MRP, you can say consumer level, yes.
So even at the MRP, it's a 25% increase on a YOY basis? And this includes the GST increase also from 5% to 12%, right?
Yes. But it depends upon category to category also.
Okay.
It's not
sure.
25% across all categories. In some categories more, some category less. So it depends upon the raw material.
Okay, got it, sir. And if I look at this price increase on a 3-year basis, like, our realization on a 3-year basis, it would be 7%. So, just wanted to understand this 7% kind of increase on a 3-year basis, how this much have impacted the consumer from the volume perspective, because our volumes are down 2% on a 3-year basis. So is that very meaningful impact? You are looking at the external environment that the demand has been impacted so much purely on account of this kind of a price increase?
Ramesh, the price increase has happened more in Hawaii slippers, Bahamas, and flight EVA, because they are having high content of polymers which became very expensive. So their price increase has been extraordinarily high, and that's affected the demand of the articles. So that 25% what we are talking, that is average across all categories.
Yeah, I understand. Sorry to dwell more on this. Can you just help us with the, let's take an example of average, the large part of your chunk of the, your product would be selling at approximately 250-300 rupees article at a consumer level, and on that you have taken, say, 20-25% increase, so that 250 to 300, kind of like 50 rupees per pair, would have such a deep, impact on the volume. Just want to understand that.
Yes, you are right. So in some categories we can feel the heat, that using 50 rupees increase is there. So it has definitely affected some volume. But sure. I think going forward, this thing will improve. Because other people also are increasing the prices. So it will take consumers some time to really adjust to the new prices.
Sure. And just last one question. On a very sustainable basis, what kind of a working capital you think would be, doable in the medium term? I understand this year it would be, high on account of high RM. But what is the target threshold level you work with?
Threshold from which angle? Amount term or what you would
like on a very sustainable working capital days?
Sustainable working capital, if it's a 3 months, I think things are workable smoothly. 3.5 months maximum.
So this is different from, last 10, if I look at 7-8 years where it was 2 months, now we have shifted to 3 months kind of working capital?
Because now this shoe category is growing much faster. It's a high value item, so its lead time is much more. So, and we have to give little more credit to the trade also, because it is high value item. So that's why it's increasing. And moreover, the raw material prices has also gone up like anything. So overall value term, it is definitely putting pressure upon the working capital side.
Sure. Thank you. Thank you, sir. Thanks for your time.
Thank you. Our next question comes from the line of Akhil Parekh with Centrum Broking Limited. Please go ahead, sir.
Thanks for the opportunity. So my first question is on the price hike. What is the price differential now between Relaxo footwear and say unbranded and some of our peers like the Aqualite, BCC?
Your voice is, can you repeat the question? Your voice, we can't hear.
Sir, I'll repeat my question. How is the price differential between Relaxo versus our peers and versus the unbranded?
See, what it was last year, we are maintaining the same gap, It is not that there is a huge gap in terms of what it was 1 year back. So I can just say that we are always expensive and unorganized. You cannot compare brand with unorganized, It's very difficult because they do pricing on daily basis. So we do not do. So it's very difficult to compare with the unbranded. But if you talk about other brands, whatever difference was there before, it is same.
And how much that would be roughly?
Depends upon brand to brand. There are so many other brands also. If you're talking about Aqualite, so 5 to 10% difference is always there.
Got it. But does that lead to down trading? Say, for example, given that, the unbranded is cheaper and they can sacrifice on quality, have we seen a trend where consumers have shifted from a branded player to unbranded?
Some parts of India, or you can say bottom of pyramid, where people are feeling the heat of inflation a lot. So they are doing it because, again, money in the pocket, whatever money they have and it's getting depreciated. So they are going towards the unorganized. But that is a short-term phenomena because the quality is not that good. So they will come back to the brand.
Okay. And my second and last question is, in terms of the retail touch points, right? If I look at fourth quarter 21's presentation, we said we had 50,000 touch points, and now we say we have 50,000 touch points. So any specific geographies where we have added 10,000 outlets in last 1 year?
So it is across actually, but major in West and South.
Got it. Thanks a lot.
Thank you. Our next question comes from the line of Nizar Gandhi, an investor. Please go ahead.
Thank you for the opportunity. My first question is regarding how your customers are reacting to the significant price increase, and will you be willing to reduce the prices if the raw material pressure softens, which is something, if I recall correctly, you have never done in the past?
We have to always remain relevant to the market conditions and also keep our pricing competitive. Keeping in view our input costs, we have to act accordingly, and that will keep on acting.
Okay, thank you, sir. And just one more question, if I may. Do you see an increasing contribution from e-commerce, like as high as 15 to even 20% from 11.5% this year? In let's say medium term, and if you can outline what is your growth strategy for incremental share in e-commerce?
So as everybody knows that digital is growing and e-commerce is the fastest growing category in footwear. So 11 to 15 in 1 year will be difficult, but we are definitely having high aspirations and we will grow to a good number. But it's difficult to say right now it will become 11 and 15 in just 1 year.
No, so sir, I was just looking to know more about the strategy that you are deploying to increase your maybe revenue share from the e-commerce channel.
Strategy, if you ask, we are going to increase the spends on the different channels, be it e-com, and so that is one of, and we are going for SMUs or whatever product specific, whatever calls we have to take, we are doing that, and we are adding more channels in that.
Okay, thank you, sir. Thank you for taking my question.
Thank you. Our next question comes from the line of Priyam Kemwat with ASK Investment. Please go ahead.
Hi, sir. Two quick questions from my end. First, you highlighted a sales mix as 25% in Hawaii and Bahamas and 35% each in Sparks and Relaxo. So was that volume breakup you were referring to, or was that a value breakup?
It's a value breakup.
Okay. And how would the volumes be then, if you could share that, please?
Volume generally we don't share, but overall you know that yes, maximum contribution come from Hawaii including Bahamas also, and second is the flight,
and last will be
two is the last one. So this is the breakup.
Okay. And then secondly, on a price increases, you highlighted that the last price increase was in 2021. Right now we are already in May, and I assume that raw material prices would have further inched up from December up to now. So are we contemplating any further price increases in the near term, or the increase taken in December was sufficient for us to maintain a margin at the desired level?
Currently, we would like to continue with what pricing has been already there and let the things stabilize. Every now and then changing pricing destabilizes the market and creates a lot of uncertainty.
Fair enough. But can we see some pressure on margins then in quarter 1, quarter 2, because there will be a lag in price increases?
Yeah, that will be there. After all, things are in the system. New things are getting adjusted. So, but things will improve in the next quarter. Maybe somewhat this quarter also.
Okay. Sir, and you highlighted our online share is 11.5% on the overall volumes. But if I take closed footwear category as a whole, what will be our online share there? I was just trying to understand, are we in line with competition or ahead of them?
Can you just repeat your question?
Sir, our overall share in online is 11.5%, as you highlighted. I just wanted to understand what would be the share in closed footwear category, sports and athleisure primarily.
So if you talk about online, so in Sparks we have 60% we are doing shoes and 40% is sandals, even in online. So majority of sales are coming more than 500 MRP in online.
Okay, sir, let me put it other way. Out of that, in our Sparks brand, what would be the online contribution?
It's more than 25%.
Okay, perfect. That's what I was looking for. Thank you.
Thank you. Our next question comes from the line of Mr. Umang Mehta with Kotak Securities. Please go ahead.
Thank you, sir. I just had one question. In the online channel, at the EBITDA level, so considering the delivery and all those expenses as well, would it be profit-making for the company?
We try to keep same margins what we have online, offline and retail. So we last time also discussed that we do not want that goods flow from one channel to another because of prices. So we keep it same.
Same margin, you mean the gross margin, right? But considering the expenses of fulfillment of those orders, would you still be making same level of margins, EBITDA level?
Yes, it's the same. We just keep everything same.
Got it. Understood. And just one quick question on the geographic breakup. Would it be possible to share some broad numbers on region-wise sales?
So our major sales come from North India, that is around 50%, and then 18% come from East, same West 18, and around 13% from South.
Got it. Thank you so much, and all the best.
Thank you. Our next question comes from the line of Devian Kulkarni with Marcellus. Please go ahead.
Yeah. Sir, so around 2 years ago, our distributor count was around 800, and today it has come down to around 650. So why has the distributor count reduced over the last 2 years?
So we have we want quality distributors. So less than 10 lakh sales per month. So there were many in number. So we have cut down the tail. So we are focusing on, the cost of reaching them was also it was not viable. So we are focusing on good number of distributors holding more than 10 lakhs per month. So that is how we decided. It was the tail, we have to cut the tail.
Right. And is this exercise now over or it is work in progress?
Sorry, can you repeat?
Sorry, is this exercise of cutting the distributors over, or it is still work in progress?
So it is a continuous process. We add 50 or we remove 25 who are not performing. So it's a continuous process.
Right. Sir, and secondly, your presentation says that you have added around 10,000 retail touch points over the last 1 year or so, and despite that, we have seen a volume decline. Now, given that this is an essential category and, replacement cycle of Hawaii would be 2 times a year roughly, so what explains the volume decline?
The volume decline is mainly due to price, region and GST impact, and these are the reason now. So we added definitely new touch points, but ultimately there is a overall pressure upon the demand, so this is the reason for volume decrease.
Right. Sir, is there any channel destocking because of the price hike?
What is the channel destocking?
Yeah, I mean reduction of inventory in the channel because the prices have gone up by 20-30%.
Yes. The distributors and retailers are very cautious because of so many changes on MRPs, so they're keeping less stocks.
Okay. Sir, and will it be possible to quantify what will be the reduction in inventory in the channel in volume terms, roughly?
Sorry, it's not. We don't have it. Distributor inventory and in the system at the retail level, that's not possible. We don't have.
Okay, that's it. Thank you.
Thank you. Our next question comes from the line of Girish Pai with Nirmal Bang. Please go ahead.
Yeah, thank you for the opportunity. You had an 8% decline in volume in FY22 versus FY21. Did the market also decline at the same rate? And if not, who gained market share?
Overall category of Hawaii and EVA, it has actually gone down because this year the market is opened up and outdoor people have started to be on the market. So closed footwear has gained. And this, chappals and these things have gone down, and at the same time, because of high inflation, buying power of these masses has gone down. So they are trying to hold on to their old slipper also, and so delaying their purchase.
No, I was trying to understand whether we've lost market share to any competitor, unlisted competitor, maybe somebody who's come from the south, for instance.
No. That's not there. No, you see now, last year, because it was a abnormal, exceptional year, open footwear sale was much higher than the normal. So that's why you are seeing there is a degrowth in the number. That is the only reason. Because last year we sold more open footwear, this year demand was less comparatively, and closed footwear pick up in this year. So we don't see there is I think some shifting of market share from here there. It's a overall numbers has come down due to open footwear and closed footwear.
If you go to 3 years back, also our this segment was 25%.
And what was the mix of open to closed footwear in FY22 compared to FY21?
This year it is around 20-80. 20 is closed footwear, 80% is open footwear. And last time it was 50-85.
Okay. And did you see any difference between urban versus rural demand?
Yes. Rural, we are feeling more pinch. There's more pressure in the rural side of India. Urban, still there is a movement, but in rural India, they are not able to absorb the inflation or price hikes.
Okay. Lastly, there was a mention that you will start kind of doing better starting from Q2. What exactly do you mean by that?
So as we have increased prices in December, and still there are 3 to 4 MRPs lying with the retailers, and they are liquidating that. So we are hopeful that whatever prices we have taken, that will be absorbed, and all the old inventory will be out of the system. So there's a lot of confusion with retailers, having multiple MRPs with him. So we are thinking that once the MRP, he liquidate his stocks and the new rates will be adjusted.
Okay. My last question is on ad spend. What was that as percentage of sales in FY22 versus FY21?
So FY21 being a tough year, yes, spend was less, intensely it was less, but definitely this year we spent as we have been doing around 4%. So this is the gap between FY21 and 22. 22 was a normal year, 21 was a little different year.
Okay. Thank you very much.
Thank you. Our next question comes from the line of Ankit Kedia with Phillip Capital. Please go ahead.
So a couple of questions from my side. Do we sell to B2B players like Udaan and AGO business? And what would be our contribution from them?
We started with Udaan and AGO, but our contribution is quite less. It is less than 1% also, you can say that. So it's a new channel for us. And the problem with them is they are playing a discounting game, which we do not want to disrupt the market. So we are cautiously watching them. And then going forward, then we'll see how we have to do business.
So because one of your competitors books, double-digit revenues through these channels, in the sports category. So, do we sell directly to them or through a distributor channel we'll sell them?
Through our distributor.
Okay. And some second question was, while you did say, South is only 13% and we added more, MBOs to West and South, could you share that, the maximum volume decline would have come more in the North market or it was evenly spread, North, South, East, West?
No, it was more in North and East part of India. West and South did well. One more reason being West and South was affected more because of COVID lockdown, which they bounced back very well last year.
Sure. So, in these two geographies, 2 years down the line, do you think both these geographies together can contribute around 40-45% of our revenues in 2 years' time, or they will still remain in that 30% kind of a ballpark range?
It's very difficult to say right now how they will go exactly to 45 or remain at 30-35. So, but definitely they have a more growth rate.
Sure. Thank you so much.
Thank you. Our next question comes from the line of Vikas with Aquarius. Please go ahead.
Thank you so much, sir, for the opportunity. So my first question on the raw material side, can you quantify what has been the jump in the raw material prices for the quarter versus 3Q and versus 4Q of last year? Any number to attach to it?
Different materials have different, we can tell you as an average of different kinds of material. Inflation. Or you want to know specific raw material, right? That is raw material.
Probably talk to or the major part of the raw materials. A number probably an average.
Yeah, please. You want Q4 versus Q4 or full year versus Q4? Full year.
Q4 versus Q3 and Q4 versus 4Q of last year.
Q4 versus Q4, so there is a huge jump. Definitely last year it was a very good year from raw material point of view. You can see in some material it was around 80% also, which is also major contributor in the material side. So Q4 versus Q4 overall there is a huge jump. You can say around 50-60%. But Q3 versus Q4 because already material has peaked out, so gap is comparatively much lower, maybe around 20%. Q3 versus Q4 in overall.
Okay. And sir, another question similar to it that so there are two parts. First, the GST hike that has to be passed on, and second is the RM inflation that is to be passed on in the price hike that we are taking. So can we say that the GST pass on is almost done and it is almost only the raw material price hike that has to be taken, or even the GST part is also left to be reflected in the price that we have to take?
I think GST has been done now. That is now history. By and large, it has been settled in the market. It's really taking time, but yes, it has been settled now. So raw material is the only leftover item, and overall inflation in the system, overall inflation on all fronts, it is also there in the everywhere it's there.
And
there are two things.
Yeah.
There are two things. One thing is cost of input has gone up because of the raw material itself and GST also. On the other hand, the buying power of the consumer has gone down. So both things have affected actually.
Correct. Then just your view as to how the market or probably our competition are strategizing with respect to taking the price hike. Are they more of taking the price hike, or they are cutting back on taking the price hike just to ensure that the demand does not get hit by a big time?
So raw material is quite common for all of them, so they have also taken price hike. And all of them are also feeling the heat, but there's a limit to pass on the price to the end consumer. So for now it is wait and watch. Let us see how prices go in next quarter.
Right. Thank you so much.
Thank you. Our next question comes from the line of Tejas Shah with Spark Capital. Please go ahead.
Tejas, your voice is not coming.
Mr. Shah, your line is unmuted.
Hello?
Yes,
Hello?
we can hear you.
Hello? Am I audible? Hello?
Yes, Tejas, you can just continue.
Yeah. So a couple of follow-ups. So in most categories, we are competing with unorganized, and across categories in our channel checks, we are picking up that wherever unorganized was dependent on Chinese imports, they have been struggling both on inflation and also availability count because the supply chain has been disrupted badly. So are we seeing any benefit of that in our favor because our supply chain will be relatively much more robust than unorganized competition in the three segments that we operate in?
The material that we are using in our Hawaii slipper or flight, EVA, we are always keeping good inventory in the system. So there is no question of disruption in our manufacturing or thing. We have been cautious and we have to be cautious on that.
Yes, sir, precisely that is the point. So definitely we are actually better off than some of the unorganized players. So are we seeing that natural gain happening in market share because unorganized is not as competitive, let's say, compared to, let's say, they were 2 years back or a year back?
But the material like polymers, EVA, PU, PVC, and all natural rubber, they are available in domestic also. So that's not an issue for them. Material is available. Now it is a question of pricing. A year back, the prices were very high in local markets but now their compatible pricing is there. So availability has not been a concern for these categories.
Fair point. Got it, sir. So second and last question. If I see our volume, we are actually lower than FY20 volume. So understandably, our capacity utilization will be lower than what we had in FY20 because we had capex also in the last 2 years. So again, we have guided for 100 crore of capex this year. This looks a bit higher on maintenance capex side. So just wanted to understand what is this outlay for?
All right. Because every year it's a very fast-moving article and we have to create new designs. So a lot of money goes in the mold side also, around 25-30 crore every year. It's a recurring capex every year we have to do. And then we are setting up some back-end operations that is almost in the final stage. So few expenses definitely will go there. So these are the two major and other routine expenditure around IT and around this one, 8-10 crore. So 100 crore, it's almost in this size, it's always there.
Okay. Fair enough, sir. That's all from my side, and all the best.
Thank you. Our next question comes from the line of Mrs. Trivedi with Trident Capital. Please go ahead.
Hi, can you hear me?
Yes, yes.
Ramesh, my question is to you. It seems we are in a rather difficult situation where, as you mentioned, in some ways the volume or the top line is not in our hands because the consumer is stressed because of inflation, and the margin is also not in our hands because the raw material, has a lot of pricing concerns. Under these kind of scenarios, how do you manage the business? What are the numbers and metrics that you focus on these days?
So we are going to increase our A&SP spend. Plus, we are going to have a competitive range introduced soon, so that we are able to get the top line fixed first. So that is the priority number one. And there will be some measures in appointment of new distributor, adding more outlets. So definitely, I think we will be coming back with the numbers.
Okay. And I mean, as the situation is, unfolding, there are so many different scenarios that are possible. And which is the scenario that, you would be most worried about? And I'm thinking, for example, if there is protracted inflation increase, for the next, let's say, 18 months, 24 months, then I would imagine that there will be a lot of pain in the system. But I'm curious to hear from your experience, what is it that you worry about the most in terms of future expectations?
At such times, we have to first protect our market share and top line. And we have to keep our, pricing very competitive so that we are there. And once the thing settled down, then you can always have your better pricing and margins also.
Can I ask you a follow-up on this? I think at least a couple of times during the call, you have emphasized on market share. Why do you care so much about market share, and why do you think if you have market share, then pricing and margin and everything else follows? But I think it's very interesting, your keen focus on market share.
It's very important. We cannot lose the shelf space. We have to be there in the mind of the consumer always. That is of prime importance. Once we are always there, then everything else will follow out of then only. If we lose the market share, then what we are left with?
Got it. And in your experience, and I'm thinking, let's say, in early 2010, when the inflation was 10% or 12%, if you compare that period to now, any learnings and lessons that you can apply from those times to today?
This time, inflation has been very severe. For example, the area material, which was at 120 rupees costing in 1.5 years back, if that becomes 300, it is very severe. It never happened in 10. So at that time, inflation was there, but it was gradual, and gradually price hikes were taken and things settled like that. This year, it has been very, very fast. So far as we have to take 4 price increases in the last 1 year. It has never happened. And still today also uncertainty continues. That's it.
Got it. But in these times, while it is bad for the economy and unfortunate for the consumer, but in some ways, is this not a good time for Relaxo to really seize and, take market share from unorganized players for whom the pain will be much more?
No, pain is for all. But they are in the system, they will always remain in the system. And we all have generally coexist, Share can go down here and there. That's it. But doesn't mean somebody will be wiped out in the system.
And you feel more competition from unorganized players given your price points, or from all of these organized players, particularly the ones who are now going public as well and, face pressure from their investors to show good results?
Competition is, from unorganized also and organized also, but we have to always remain competitive on all fronts. We can't just look down upon anybody lightly.
They were selling before now also, so listing and non-listing does not...
So they were always in the system. They will remain always in the system,
Yes. Got it. And one final question, if I might. Ramesh, my biggest concern is, succession plan for Relaxo. Is this something that is actively discussed in the company, or is this something, that the board is discussing? What are your personal thoughts on this?
So that thing is in process. We are serious on it, but we can't diverge beyond anything now.
Okay. All right. Thank you so much, and good luck to you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question for today. I now hand the conference over to Mr. Akhil Parekh for closing comments.
Thanks, Ryan. On behalf of Centrum Broking, I would like to thank the entire management team of Relaxo for answering all the questions very patiently and in detail. I'll hand over the call to the management team for any closing remarks if any. Thank you.
Thank you all for joining the call. This is all from our side. Looking forward to join you again. Thank you very much. Thank you from Relaxo side.